If you talk about digitalization AI, you can't not talk about energy, right? So energy transition's a great one to think about. That energy transition story starts to feed into the digitalization story and allows us a better lens as we're evaluating data centers or where they're being sited or how they're being powered or what the underwriting assumptions need to be. It's hard to do this well in this market, being a large infrastructure investor, without having specialist capabilities to really go deep on some of these big trends.
The infrastructure economy is entering a period unlike anything we've seen in a century. An aging U.S. power grid is reaching its limits, just as demand from data centers, electrification, and manufacturing is surging. Meanwhile, investors are awash in capital and looking for the best way to finance the next generation of energy and digital infrastructure. Infrastructure that they need to deploy fast enough, smart enough, and with the right financing structures to keep pace with this unprecedented moment. But at the same time, there's uncertainty around federal regulations, permitting, and a growing public backlash against hyperscale data centers. It all makes for an exciting and challenging market environment.
I think of the kind of convergence of these things is actually where a lot of the excitement is right now.
This is Critical Capital. I'm Alfred Johnson, the CEO of Crux. We're the capital platform for the clean economy. My guest today is Jessica Bailey, the global head of infrastructure at Nuveen, an institutional giant with over $1.4 trillion in assets under management. They've been investing in infrastructure since the start of the firm in 1898. Jessica previously worked in philanthropy and has played a key role in developing C-PACE financing, a financial tool that helps decarbonize buildings. She eventually co-founded Greenworks Lending, which was acquired by Nuveen in 2021. Today, she helps direct $40 billion in infrastructure investments across the energy transition, digital infrastructure, transportation, and the built environment. And I've gotten to know Jessica and the terrific team at Nuveen over the last year as we've developed and announced a large new debt facility to scale Crux's investments in clean and critical infrastructure. Jessica Bailey, welcome to Critical Capital.
Thank you. Excited to be here.
I want to jump immediately into it. So you have talked about the fact that we are witnessing this generational redesign of how we build and invest in global infrastructure. And you said that it's unlike anything that we've seen in the last half century. What does that mean? And what do you think are the primary forces that are driving the transformation?
Yeah, when you phrase it like that, I sound a little bit hyperbolic, right? But I actually think it is that big. It is that generational. If you think about infrastructure as like the fabric on which societies are built, what I feel like we're witnessing right now is this fundamental reshaping of that fabric. And we spent a lot of time talking about the kind of political or ideological piece of that. But I really think, there's three fundamental things happening right now that are having massive transformational effects. And that's the energy transition that we're seeing, electrification or digitalization, or however you want to talk about that, and then just a really old kind of aging traditional infrastructure that all needs to be rebuilt. So you get those three things together, it's really hard not to be kind of dramatic about the hugeness of what we're all facing here.
Yes, I want to get into the three themes in a second, but first I want to ground in Nuveen, because you have such a cool platform. It's been around since 1898, I think, if I have it correctly. And I heard you say that you've been investing in infrastructure since the beginning. You just talked about how we're in this transformational moment that's unlike anything that we've seen in a long time. Do you think that the capital solutions that have been applied in the past are the right ones here? How do we need to think about the capital side of the equation differently?
Yeah, I think you go back to like the highways, the bridges, the railroads that sort of fueled what I think of as sort of infrastructure 1.0. And we were kind of structuring the original municipal bonds to supply financing to build the roads that were necessary to move goods and services around. There's definitely a level of sophistication that has hit this market that probably wasn't around 100 years ago when we all started doing this. It was a little bit more kind of vanilla ice cream type financing of infrastructure. I think because of some of the kind of innovation in the financial markets overall, we're seeing a lot of really cool structures that have come into this market that are meeting the needs both of the builders of the fabric of this new infrastructure, but also the investors that are putting, really huge sums of capital into this market right now. So that's exciting. That's the fun stuff about what we get to do as sort of a specialist infrastructure investor. We get to, help define what those new financing tools are, how they're used. That's been a lot of fun to be a part of.
What's an example there that you're proud of?
So we could talk about CPACE, right? So CPACE is a type of financing that I have some fingerprints in helping to design over the last couple of years. It stands for Commercial Property Assessed Clean Energy. Really horrible name and an equally horrible acronym, I admit. But essentially, what it was a policy innovation that allowed for clean energy upgrades in real estate to be financed using the municipal tax rolls. So we kind of take a municipal financing structure, we marry it up with what kind of feels like a little bit of a commercial mortgage structure, and we get a type of financing that is helping to renovate and modernize the built environment. It kind of started as an ABF type structure where we're using the securitization market to bring capital into the rated notes that were coming off of the financings that we were making. We've now moved it into more of a fund model where primarily US insurance companies are able to move pools of capital into rated note feeders. Not to get too technical here, but you're asking about financial structures, but these are kind of innovations, and they have had massive efficiencies and allowed, huge markets to grow in what I think of as part of this infrastructure 2.0 thing that we're talking about.
So, Jessica, your background in CPACE is the history of the industry. And I particularly find it so interesting that you were at the Connecticut Green Bank as the structure was starting to hit the market. Can you tell a little bit of that story and the evolution of the market through your eyes as a primary innovator within it?
Yeah, and I'll take you back even a couple of years before that. I actually started on CPAY sitting in a seat in philanthropy, which is not necessarily where you think of like entrepreneurs starting their lives. But I was sitting as a program officer at the Rockefeller Brothers Fund with the mandate of passing policies to promote climate change solutions in the US. And I was approached by someone who was setting up a nonprofit to try to bring nationally something that was happening in Berkeley, California, that was using the garbage collection assessment system to finance rooftop solar on homes. And the guy came in, he explained it to me. I'm quite literally being serious with you when I say I had to Google what is a municipal bond after the meeting because I had no background in any of kind of the public finance side of the business. That was sort of the beginning of CPACE. That probably would have been like 2008-ish, and then got the first nonprofit started to start moving this policy around the country. Got really excited about the potential for this policy to have an impact on decarbonizing buildings. Care about climate change, you got to care about buildings because they contribute a lot of emissions to the planet here. But I got a little bit frustrated that we weren't actually seeing the policies turn into action, and so left to work for the state of Connecticut, who had just started their Connecticut Green Bank, trying to figure out ways that the public sector could create structures to scale private capital. And I said, hey, I'll totally do that. But have you heard about CPACE? Let's see if we can get that done in Connecticut. So we sort of incubated a program in the state of Connecticut. It worked quite well. But after about a year and a half of doing that, we decided it was time to see if we could do it outside of Connecticut, right? If you really want to have an impact, it's hard to make the case that you can do it with 3 million, 3 million people in Connecticut. So we left, my partner and I founded a company and kind of nationalized CPACE, brought it to now, I think it's 40 plus states that it's in. We just got laws passed in Canada. So it's been a cool story.
Jessica, what do you think obsessed you about that initial problem? Why did you get interested in the Berkeley guy with the garbage collection and the property assessments? And why did you see that as such an elegant solution to something that you cared about?
So I think at the time, maybe still even, there's a idea that the role of the government is to throw money at society's problems, and that's the way they're going to get solved. And whether it's climate change or anything else, the focus turns to the government of how can you fix this. And what I liked about CPACE policy was that what we were asking the government to do in the market was what governments are pretty good at, which is setting a market structure that gives an investor a price signal so they can move the capital in to scale the solution. And so for me, it sort of had this ability to not just be like a pilot project where the government can say, look what we can do. Instead, it was the government saying, sure, we'll allow a law to be passed that meets the societal goals that we're aiming for here. But you investors, private sector, you're going to be the ones that need to scale the solution. And for me, that was just a really kind of elegant way for everyone to stay in the lane that they ought to stay in as you think about public-private partnerships. And ultimately, as we know, elections change and appropriations change. And there's really not many examples of the government having the ability to stay at something for as long as they would need to stay at it in order to scale a solution. Whereas the private sector, this is what we do, right? You kind of give us a market, we can build it. And that's been a really fun piece of seeing how CPACE has grown these last few years.
I think it's really interesting how essential tax related strategies are to energy infrastructure. And if you take it back, even before the creation of tax credits for energy, we've been incentivizing oil and gas through various tax incentives since before World War One. I've also thought about it as a politically durable structure. Even as we saw the IRA have some amount of damage applied to it in OB3, you saw tax credits maintained for many of the large categories like battery storage, solar, for a longer period of time. It's protected, obviously, for 4 years as the credits are wound down. And then all these other categories like manufacturing, critical minerals retain the tax credits. And so there is this distance from the executive branch that things like the Loan Programs Office don't have that I think makes tax credits a really interesting tool. Do you agree with that?
Yeah, well, and as you're saying that, it's like a tax credit give, if you will. If the government's going to give a tax credit, a tax abatement or whatever it's going to be, they're sort of saying we're okay not receiving future money. And maybe that's politically easier than saying we're going to kind of give you money we've already got, right? So it's just sort of like the other side of the ledger. And there's always more calls upon the capital that the government has than there are dollars. So maybe it's easier to say like, well, we'll kind of forego future capital through, you not paying us taxes, but we can't give you anything we've got currently because it's all spoken for.
Totally. And it distances the government from the role of having to be the arbiter of the capital decision. So when I was at the US Treasury at the beginning of my career, it was during the Solyndra era where a single investment provoked all this response. Tax credits rely on external investors doing the underwriting and the execution in order to get the credit. Transitioning from there, tax equity has become such an important financing tool. It's awfully esoteric, but it's awfully large. It's a $40 billion market or so as of 2025. Tell me how you at Nuveen see the tax equity market as an accelerant for building out energy infrastructure. It of course, relates to the deal that we just announced together.
Yeah. Yeah, for sure. And I mean, I think this is another, I use CPACE as an example, but these sort of, these hybrid partnership flips, these innovative tax models, I think are another really exciting way that we're seeing capital flow into these markets. So in my mind, like the hybrid structure that we've got right now has become dominant because it's solving for the problem that developers have and investors have at the same time. And it's really unusual to be able to solve both parties' issues at the same time. So, for developers, you've got this ability to effectuate a tax step up in basis. The project owner is now going to get their tax credits based on the fair market value of the project versus what it costs to build it. So that's really good for a developer and kind of gets these projects off the ground. And then for an investor like us, we're able to keep the kind of debt-like characteristics of these investments that we really like and need. So we're going to get our, scheduled priority payments. We're going to have seniority in the capital structure. We're going to have our downside protections, all while we're still getting the kind of lift or the upside potential of like an equity like investment. You're sort of taking characteristics of both, you're putting them together, and both sides of the transaction are like, oh yeah, this works for me. And then you start to see it kind of scale out from there.
Totally. So, Jessica, let's go back to the macro, right? You've talked about these three big intersecting themes, which are the energy transition, digital infrastructure, and the aging legacy system of power production that we have around us. How do you see those themes intersecting in the market today?
Well, and I think that's the interesting thing about these themes. They're not disparate. It's like a loop, right? They all kind of feed each other. And so if you talk about digitalization AI, you can't not talk about energy, right? That's sort of like the critical thing to be thinking about. There's some statistic I saw, like the number of announced data centers versus the amount of energy available to fund them is like there's like a 70% gap, right? So we're needing to link these trends in a way that we haven't seen before. And I think for someone like Nuveen, that's really exciting because when I look backwards the last 5 years, Nuveen has been very smart about bringing in specialist capabilities to kind of balance out our scale and our breadth of being, as I was saying, kind of a large infrastructure investor. It's hard to do this well in this market without having specialist capabilities to really go deep on some of these big trends. So energy transition's a great one to think about, right? Because we've got a couple of different teams that are working on that. But that energy transition story starts to feed into the digitalization story, and allows us a better lens as we're evaluating, data centers or where they're being sited or how they're being powered or what the underwriting assumptions need to be. So I think of the kind of convergence of these things is actually where a lot of the excitement is right now.
Jessica, how much room do you think we have to run here? So I'm always struck by the next largest figure that comes out in the news or on Twitter of the capex that the hyperscalers are going to deploy. It was 600 billion before it was 700 billion and 800 billion. How much more do you think that we will see, and how does that influence the way that you think about allocating capital?
So I hate the question of like how much more can it grow, because I keep wanting to say like there's going to be a natural ceiling, and I don't see anything that backs that up right now. So it feels like insane to say like it's never going to stop, right? And so I'm not going to say that.
But you sort of believe it.
Yeah, like it sort of feels like I don't know what's going to slow it down except things like energy supply, water conservation, community pressure, right? So I think the governors, if you will, on the growth are not really going to necessarily be capital, because you're seeing investor, like us, but others too. There's so much capital moving in there. So it's almost like capital's not the constraint as it normally is when you're seeing a market like this. So it's more going to be constrained on things like how are you going to power them? Where are they going to be? People don't want them around them anymore. What are you going to do about the water issues when you're talking about putting some of these in like Arizona or places that already have water scarcity issues? So it feels like we're going to have almost like a kind of political governance governor on it rather than a investor governor, which is sort of unique, right? You don't see that too often in markets like this, but that's probably going to be the next wave of conversations. We're starting to see it already.
Okay, so let's go deeper on that. So Gallup has a poll out recently that has 71% of Americans opposing data centers. The New Republic had this fun headline about that, which is that Americans have finally agreed that we all hate the same thing. And in that same poll that they found a majority of Republicans also oppose data centers. Tell me how you're seeing the local opposition take form. How does it influence the way that you underwrite assets and think about the places to play?
Well, I think fundamentally that like what a miss and a PR strategy that the AI industry had. I don't know like who came up with the idea of like, let's just tell everybody that we're going to take all their jobs and we're going to like dramatically shift everything and we're going to have massive unemployment and the robots are taking over, and expect that everyone's going to be like, so this is amazing, sign me up. Like people are scared, right? At every level. Like we've got like people my kids' generation that are like the, seniors in high school, they're nervous. You've got people like our parents' generation, like it kind of alienated everybody. So I don't know who came up with that strategy, but like somebody needs to get them better talking points.
I think you might be reading talking points from Dario Amodei of Anthropic, who is very active on that. But I take the point.
Yeah. I mean, I think leading with the excitement of what AI is going to do from the economy is hard not to do, right? Because it is tremendously exciting. But I think that like kind of quickly pivoted folks to becoming a little bit perhaps too comfortable talking about all of the kind of outcomes that were going to happen from this that, frankly aren't going to be good for everyone. So then that leads to all the political backlash that we're seeing, right? I think the wait in Virginia to get connected to the grid is like 7 years. Like that's a long time. So we've got both like a political issue where the kind of messaging was a little bit off. Someone will figure that out eventually. But then you've got more of just like a structural issue where there's simply not enough energy. And so we're going to have to figure out how you do that. And then you've got, a couple of these companies agreeing to sign the voluntary pledge saying, well, we'll bring our own energy. But then, what does that look like and how does that feed in? So it's pretty complex right now.
Yeah, you talked about politics and governance being the governor on the space. It is interesting. I think about this a lot, how in infrastructure, we have to invest on 15, 20-year timelines, but politics and policy can change all of the time. How do you think about navigating that particular governor when you're thinking about making investments in assets that have very long useful lives?
Yeah. So having started a business that depended upon a public-private partnership, I'm very sensitive to this question. And I think about, how you interact with the government in this space in two different ways. One is the government like an enabler and sort of like a tailwind if the political winds are blowing in your favor? Or, on the second hand, is the government intervention required for you to have your business? And you kind of have to have both of those lens when you're kind of underwriting regulatory risk or political risk into a business. So again, to use the CPACE example, we needed the government, the state government, to pass a law that said energy upgrades are a public benefit. And so you can use the tax collection mechanism to secure and collect the repayment of these loans. So we needed that to happen at the state level. But then once that law was passed, it was incredibly durable. So we got this law in red states and blue states and everywhere in between. And the government wasn't asked to put a nickel in. They were just asked to kind of allow for this structure to exist. And we've seen that to be very durable and no rollbacks to these programs. People love it. It's private capital moving in. So that's like a really good way to interact with the government. There's a lot of other examples, of course, where you build a business that requires a government subsidy or some sort of a feed-in tariff. Those things have demonstrated a lot more variability. And then you're, underwriting a project based on something that can move when an election shifts. And that becomes, I think, really, really very scary. And you've got to be very conscious and very disciplined in what the assumptions are, particularly in the outer years where, the kind of massive swings that we're seeing in kind of government support really can upend underwriting assumptions, right?
Yeah, so I want to stick with your analogy of tailwinds and headwinds. 2025 was a windy year. There was a lot of different kinds of winds that were hitting the industry. We started with a really strong tailwind from the IRA that was driving a ton of infrastructure development. There was then the headwind from the tax law over the summer of last year. We've come out the other side of it with a tailwind coming from AI and the infrastructure build out. It seems like the conversation in DC is starting to shift towards electricity prices going up and the need for more domestic supply chains of various things, transmission, et cetera. How do you see the wins right now in the industry?
So I think the political wins are being overtaken by the economic wins. So we talk a lot about, where's the political wind, and obviously from Biden to Trump, and, is it offshore wind or solar, battery storage or whatever it is. I actually think a lot of those more political conversations have been muted by just the massive economic demand for energy, which I think is good news for all the stuff that we worried would get shut down because the political winds changed. Turns out we still need them because without them, we're not going to be able to meet the dramatic energy supply gap that we've got. So I think economics can trump politics. It feels like that's what we're seeing right now, and it becomes an all of the above strategy. And some on the far left won't like that because it's going to include some hydrocarbons, and some on the right aren't going to like it because it's going to include some wind. But the reality is we're going to need it all.
So we were super excited recently to announce this tax equity GP financing with you guys. It's an amazing team, and the team is growing very quickly, deploying a lot of capital. I know one of the big areas of focus within that team is manufacturing finance. How do you see the need for more domestic manufacturing, and how are you playing it?
Yeah. So I think that's another trend, right? And maybe kind of it falls under the electrification, digitalization, but this kind of onshoring, I think that's tremendously exciting. And I think where we're playing is I think we call it like the picks and shovels behind it, right? So what are the financing needs that are enabling the onshoring of manufacturing? And we're seeing a lot of really interesting opportunities there. This is another, we talked a little bit about the kind of innovation in financing and structures that are allowing big pools of capital to move into kind of newer industries because it's structured in a way that's protecting the downside for, folks like a Nuveen or an insurance company client that needs an investment grade or a near investment grade rating on where they're moving their capital. These kind of asset-backed structures, I think, are quite exciting, especially finance companies that are coming in and helping to bring capital to some of the onshoring of the manufacturing. It's complex, but this is, I think, where the specialist model and the origination capabilities that we've got within our team. You mentioned the energy infrastructure credit team that I know you worked with on your deal. They're out there, like they're in these deals. They're kind of unpeeling the onion and figuring out where there's opportunities to deploy smart capital, and there's a bunch of them.
Yeah, I think it's such an interesting time in manufacturing right now because we went through these successive shocks, right? There was COVID where we all realized that our stuff came from everywhere. Then there was the trade stuff from last year. Then there is changing tax policy. And when you look at that, there's been a lot of discussion of the particular choke points that may exist in rare earths or other kinds of components, the huge backlog on transformers for the grid. Where do you see the areas of particular dislocation where we need significantly more finance to solve the problem of bringing the right manufacturing back to the US?
I would say an area that I'm particularly excited about is just on storage. I think there's been so much advancement that we're seeing on battery storage. And that was always the reason against doing more solar or more wind was that we can't store it. And as we continue to make advances there, I think we're seeing that open up new opportunities for more renewables to come online as well.
Okay, so we're in this huge infrastructure boom. The headlines are dominated by the hyperscalers and the mega data centers. There are lots of subsectors of energy. We just talked about manufacturing and components. What other subsectors of energy other than storage are you particularly excited about and very active on within Nuveen?
Distributed generation solar would be another place that we're really focused. We've got retail power prices that are double what wholesale power prices are. So that gap opens up some opportunities there. The smaller projects that have kind of smaller permitting requirements seem to be moving a little bit faster. So you don't have, seeing that kind of the 7-year wait in Virginia, which everyone's holding out as like kind of manifestation of the crisis. The smaller projects, we're seeing timelines more of like 6 months to 2 years. And with the need to deploy capital in real time, that helps. We do a lot of kind of energy as a service. So that EAAS, that's the acronym's just as bad as CPACE, but this is allowing customers to monetize their cost savings with energy efficiency measures without having to make the upfront kind of capital investment in that. So those businesses we think have a lot of runway, especially as we're trying to kind of reduce demands upon the grid. So a lot of these businesses are, they're hard to scale, but because of all of the pressures around the grid and the need for energy efficiency, we're getting pretty excited about what that could mean. And then the built environment, I mentioned this earlier, if you care about energy, you care about the grid, you think that data centers are gobbling up all the energy, then you've got to look at buildings and figuring out a way to reduce the energy consumption of buildings is really critical. And the best way we have seen to do that is to create a smart financing option that's allowing a building owner to make those energy improvements in their building without having to go out of pocket for money that would be better spent on kind of core business outcomes. So, that kind of CPACE as a financing solution to decarbonize or reduce energy consumption is another area that we're really bullish on.
Jessica, you're so optimistic about the seat that you're in and the opportunities within it. It is very wonderful to be with somebody who sees the glass as half full as you see it. With that said, what keeps you up at night?
So look, there's a lot of reasons to be pessimistic. So I don't want to come off as being, everything's rosy. I think that the reality is there's like an incredible excitement about being in this seat in that moment. I hope you feel it too. And I say to my team all the time, like, there's not that many people in the world that get to be in the seats we're in the moment we're in. And like, this is our job. And so, I take the responsibility really seriously, but there's a bunch of stuff that keeps me up at night. I think the big one is like, are we moving fast enough? Right? Like you sometimes have this like overwhelming moment of the amount of change that's happening, the pace of that change. Are the right grownups in the room making these decisions of, how the deployment of this capital is made? Or do we have the right, regulatory frameworks to make sure we don't look back 10 years from now and say, oh man, we should have put some guardrails around that. That moved too quickly. So as an entrepreneur, I'm like very comfortable like moving fast and breaking things, but I take the responsibility seriously to invest for the future. We have this tagline at Nuveen, invest like the future's watching. Like that's very central to me. I care a lot about the legacy we leave behind. So I would say the thing that worries me the most is that I know full well that not everybody thinks that. And when you think about the amount of money that's moving, if you've got decisions that are being made with huge impacts that don't have any controls on them yet, you can have some pretty bad outcomes.
Well, Jessica, it has been a real pleasure to have you on the show. Again, you bring this really rich and unique perspective across lots of different aspects. And personally, the fact that you have been a founder, I think, is one of the things that really excites me about the partnership with Nuveen and with you guys. So thank you for your time.
Yeah, right back at you. Thanks for having me.
Jessica Bailey is the global head of infrastructure at Nuveen. Nuveen and Crux recently announced a $500 million financing to scale our investments in clean and critical infrastructure projects. Critical Capital is co-produced by Crux and Latitude Media. Our production team includes John Sheehan, Jenna Herzog, Ann Bailey, Stephen Lacey, and Sean Marquand. Matthew Filler mixed the show. Additional production by Emily Hughes and the excellent team at Crux, the capital platform for the clean economy. You can find Critical Capital on Spotify, Apple, or wherever you get your podcasts. I'm Alfred Johnson. Thanks for listening.